Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, Chief Currency Analyst here at HYCM. Good to have you on board. Hello, folks, as you're coming in. Hi, Ali, Danish, Hashik, John. Good to have you. Selva, Yue, excellent. Great to have you on board, guys. There's a lot going on in the markets at the moment, so it's a good time for us to have a workshop and to see what is going on. Let's just move to the disclaimer, just to make sure that, particularly for today as well, as we're talking about different market moves, different market announcements, one of the key things to be aware of is the market is very dynamic, so situations change. As a result, what can be sensible at 1 o'clock can be foolish at 2 o'clock. So the whole idea of these online trading workshops is that you're sitting over my shoulder, as it were, so you can start to see my rationale for making trading decisions, and then you can learn from that so you can make your own trading decisions. So that's the whole idea of these workshops. That's why they're in place. But what they're not a signal trading service. So even though I will talk about entries, exits, stops, take profits, it's not that I'm intending, or HYCM are intending these to be a signal service. It's more about education. I have to say that, particularly if you're a new trader, it's easy to get confused about what's going on. So that's just a disclaimer to make that clear. That's great as folks are coming in. Don't forget, during this webinar, you can go through, hey John, you can answer questions, ask questions, just pop them in the box and we can deal with them, particularly if you've got any trade setups you would like to look at. Just put them in the question box and I'll get to them by the end of the webinar. So have a moment, and if there's any trades that you're either in or thinking of taking and you would like my comment, please just pop it in the question panel. Very happy to go through any trades that people are looking at all. That would be, my pleasure. So okay, I think most folks are in now. Yeah, okay, that's great. So we'll press on with the session. Now, in the session ahead, a special topic that we're looking at today is a nice little special topic that I'm doing, and it's one that I really like. When it works a treat. And this is a little trick for trading surprise interest rate statement releases. So obviously you don't know when a surprise interest rate statement is coming. However, this is a little trick that I'll show you, so that when it does come, you get in as quickly as possible. So that's just a little trick that I've developed, and it can be a very, very profitable when it pays off. So that's just something I want to flag up to you, and I will go through that with you during the webinar. Each workshop I like to do a special topic, something a little bit different, and this is today's one. So do hang fire and make sure you listen to that, because it's a trick that is worth being aware of. Okay, handout for the session, that's in the handout section of the GoToWebinar control panel. There's a section that says workshop guide 3rd of December, and if you click on that, you will have a workshop guide that looks like this. This workshop guide I've put together deliberately to be simple enough to fit on one page of A4, but comprehensive enough so that it is a useful reference point when you're trading. These 5 aspects of trading are questions that have become internalized to me. So every single time I trade, I'm always doing these 5 things. And particularly if you're starting to get a routine, you're trying to understand how fundamental and technical trading work together, then please do use this handout, print it out, put it by the side of your desk, and you can use it. And I'm going to use this as a template for our workshop here, which is covering these key topics. So that's just making sure you got the handout. Any suggestions for any future topics you like, just email me at this email address, giles.coughlin@hycm.com. Be very happy to deal with any topics that you particularly like attention with, and from any aspect of trading, happy to look at a topic there. Now, as we get stuck in, we're going to get stuck into the workshop. And before we do, I just want to have a quick focus on the pound. Now, the reason I want to have a quick focus on the pound is because the pound is being moved, particularly now on poll data. Now, for those of you who don't know what a poll is essentially a questionnaire designed to find out what people's future intentions are. So in other words, in the UK, people are asked, what are their intentions about voting? And so this poll data is closely followed by the market to try to understand, what proportion of the country is wanting to vote for the Conservative Party. Now, the pound at the moment is being moved primarily over this one issue here. The specific catalyst is whether there is a Conservative majority or not. The Conservatives are a party within the UK. PM Boris Johnson is the leader of the Conservative Party. Now, PM Boris Johnson has given to the country his Brexit Withdrawal Agreement Bill. Okay, it's nicknamed the WAB. And what Boris Johnson has presented to Parliament is his Withdrawal Agreement Bill. However, Parliament wasn't able to accept it. So as a result, there is now a UK election that's taking place in 9 days' time on the 12th of December. The result of that election will decide essentially whether Boris Johnson's Withdrawal Agreement Bill is passed through Parliament. If there's a Conservative majority, then the chances are greater of Boris Johnson's bill being passed. So if there's a Conservative majority, then we can expect Boris Johnson's bill to pass through UK Parliament. So that's why the market is looking at this poll data. So as long as the Conservative majority is there, expect the pound to be bought. Okay, that's the key thing. So we'll just quickly look at the pound chart. So here we go. Right, what we can see is, we're just going to scroll out, just go slightly larger. You can see that the pound has been in this range, this 1.3, 1.28 range, a 200 pip range, and it's been in it since the 16th roughly of October. Okay, been stuck in that range, so nearly 2 months, heading up to 2 months anyway. So the expectations are that the Conservative Party are going to win the UK elections and that Boris Johnson's deal will be pushed through. So what is bubbling the pound around at the moment is how likely that seems to be. The likelier it is that there's a Conservative majority, the more bids we've got in the pound. Now, we've got the pound approaching this 1.3 level. We had some dollar weakness out yesterday. There was some quite weak US data. We've seen the dollar index plummeting, and as a result, we're seeing the pound pushing up to this 1.30 level. Obviously, this key overhead resistance level, big round number, it's a key line in the sand. So whether the pound or not has got enough to push over 1.3, I'm not sure. But what is moving the pound is this poll data that's coming out. So once you've got that in your head, then when you see the latest poll data being released, you'll know what the pressure will be on the pound. So if the Conservative majority increases, then the pressure on the pound will increase. If the Conservative majority narrows or lessens, then you'll see the pound being sold. So that is what is moving the pound around. And let me just I'll show you, because we looked at this last week, so that's why it's helpful to look at. You can see last week on November the 26th on this workshop, we saw the pound was pressured because the Conservatives lead narrowed on this Kantar poll. Okay, so when this narrowing lead was announced, look, Conservatives down 2%, Labour up 5%, so a narrowing lead. What would we expect? We expect the pound to fall, and this is the 1 minute chart. This is when the data was released here at 8 a.m. and we saw the pound fall, you know, good sort of 30, 40 points on that announcement. So this is how the pound's being shifted around. It's on the latest poll data, and it's key to get into your head, okay? So this is also why a news squawk is such a powerful tool, because what a news squawk does is it tells you, as that market news is being broken, what's happening. So a news squawk, and I use a RAN squawk news feed, and I'm just going to put that in the list, because if you have never used a squawk, you should really consider getting one. If you're day trading, you know, it's vital to have a squawk service, and I just sent that to everyone. This RAN squawk will tell you, you know, all the latest kind of information you need, what the latest poll data is, what the latest news announcements are. So having one really helps you to react and to respond. If you don't have a squawk service, then let me just point out some different good polls to you. This is the Politico poll of polls, very helpful. It kind of shows you, again, I'll send it to you, or it shows you what the, let me show you. It's easier to explain than to talk about, easier to show you than to talk about it. So look at the poll of polls, and we'll have a little look at the UK general election. And what it does, it takes a cross section and smooths out all the different poll data, okay? So at the moment, we've got a 43%, 33% Conservative lead. And as that shifts around, the pound shifts around. But what I would say is the market is very responsive to kind of, if you just pull up this poll and look, then you're not necessarily getting the latest poll data. So what the market thrives on is fresh news. It really wants it as fresh as possible. So that's why having a squawk service is very helpful. Even if you've got like the cheapest option, I think it's about £30, maybe, you know, $40, $50. It may even be cheaper than that, actually. You might even get like a $30 one each month. It has a delay on the feed, but you'll still see what the latest data is. And that's what the market craves for, this latest data. There's also here a YouGov poll. This one is spoken about a lot. I'll just send that to everybody. And there's a Financial Times poll. Now, the Financial Times poll, also on that Financial Times link I've just sent you there, what that gives you, it gives you some detail on this MRP poll, okay? Now, the MRP poll has a lot of significance because the market gives it a lot of weight. It's calculated in a slightly different way to the other poll, and it's seen as the, you know, a more accurate poll. And this poll, it has a different mechanism, the way that it's decided. And if you're interested in the detail, go to the Financial Times, and there's a video on how they calculate the MRP poll. But this poll accurately predicted the 2017 hung parliament, okay? So we were looking last week, we were waiting for this MRP poll to be released, okay? So this is when it was released here. This is when we got the rumors that the Conservative Party had a 68-seat majority, and we can see that that poll has been bid. This was a pivot point here. So if we look at, let's see, where is the, there we go, look. I'll show you the hourly chart. You see here, that is the same place on my chart, the screen. This was the announcement of the MRP poll. This was, we had the pound was bid into the announcement. It came out at 10 o'clock. The pound was bid into it because there was a rumor that the MRP poll was showing a strong Conservative majority, as it did. And then price moved back down to the pivot point and moved up to the next R1 pivot point. So you can see that the pound was, was bid on this poll data, and any pullbacks were bid up. So I just wanted to flag that up to you. And the reason I want to flag it up to you is because we're really getting into the final days of the election, okay? And if the Conservatives do have a strong majority, what I would expect is, you can see there's some selling at that 1.300 level, which is what I'd expect, because it's unclear whether the pound's going to push through that level. But what I'd expect is, if there is a Conservative majority, I'd expect this 1.3 level to break and price to head up to 1.32, 1.33. Okay, so that's what I'm anticipating on a Conservative majority victory, and obviously former resistance becomes support. So just want to flag, it's worth taking some time over that, because of where we are with the elections, and because of the focus on the pound. It's just 9 days to go now, so look out for that poll data and you'll see how it moves the pound, and that's what we're looking at. Okay, turning to your handout. So we're going to get into the section properly. The first thing to do when we look at your handout is to look back, okay? What we're always trying to do when we come to the market is we're always trying to see what is the recent sentiment, what is the current mood of the market. Now, when you hear the word sentiment, instead of sentiment, think of market mood. Now, the market, like people, has different moods, and recognizing what those moods are crucial in understanding what future directions of currencies will have. So as we're looking back, one of the first things I do when I come to my desk around 6:30 a.m. GMT time, I want to look back what's been happening in the Asia session, and I want to see what is the key sentiment in the market at the moment, and I really want to get that baseline. So this morning, as we're coming to our desks, one of the key things to understand is where are we at with the US-China trade talks, because things have taken a little shift on the US-China trade talks, and there was an announcement today that has definitely raised a big question mark about the progress of the US-China trade talks. I'm going to cover that now. So what's happened is the next round of US tariffs is set for December the 15th. President Trump has been really positive about tariffs. He keeps saying how much he likes them. He keeps telling the American people that, you know, the equity market is going racing higher, and we're penalizing China with tariffs. They're paying for all these tariffs. It's really great for the US. So President Trump's really liking the tariffs. He says tariffs work, etc., etc. There's been tensions over US interference with China's domestic affairs. We saw some of that over the Hong Kong reform bill that was announced in the US that President Trump was signing, and that has irritated China yesterday. We've also seen the US dollar being sold off on weak US data. Okay, so you look at the dollar index. I'll just quickly flag up the dollar index for us. You'll see that the dollar's being sold, and the dollar's been sold on this weak data. We had a false break here of this overhead resistance just around the 98.50 level, and then we saw sell down into this support level here, and prices now trying to work out what it's doing, and it'll be looking ahead to key US data for the next direction on the dollar. But yesterday, strong US dollar selling, and that was on the weak US data that came out. So let me just try and find that. Yeah, I'm just gonna adjust my calendar. So, and I'm just going to bring my calendar across. Okay. So we saw the ISM manufacturing PMI was a fall, construction spending was a fall. So that way down the US dollar. We had manufacturing prices down as well. So it's a weak set of data for the US dollar. And what we have coming out tomorrow on Wednesday is going to be key for the US dollar. We've got non-manufacturing PMI, in other words, services, and we've got final services PMI. So that's going to have some, that's going to be the next decision point for the US dollar. So if that dollar weakness is going to carry on, it would need some, a downtick in the services PMI to continue that downward move. Now, this is the surprise I wanted to get us to, because around 11 o'clock-ish GMT time, US President Trump surprised markets, saying it's probably better to wait until after the 2020 presidential election for a China deal. Okay, now this was a surprise, and this is what you want to get into the habit of, being able to recognize surprise moves in the market. This stood out like a sore thumb to me as soon as it was mentioned, and I got a message out to our Telegram channel within a few minutes of that announcement. And essentially, what the market had been expecting was President Trump to sign a phase 1 trade deal with China before the presidential elections, to use it as a tool in his election campaign, saying, I'm the guy who's got the deal with China. So with President Trump saying, well, let's wait until after the presidential elections for a China deal, that's a surprise. Whenever we're trading news, we need to ask ourselves two questions. Is it new? Is it significant? So is this new? Yes. Is it significant? Yes. It means that the trade deal is not as close between US and China as the market was expecting. So this is a negative for global growth. This is what the US-China trade deal is all about. It's all about, because the US and China, between the two of them, make up about 40% of the world's GDP. If the US and China aren't getting on, the whole world is going to find it harder to get on. So this means global growth is pressured. This means the market switches to a risk-off mood. And we expect to see yen strength, Swiss franc strength, gold strength, and oil weakness. So going to our charts, this is what we've seen, okay? So going to the chart, we've seen this is an overhead resistance level. Just here, 74.50. We're seeing price rejecting that overhead resistance, pushing down. We saw this is the 1 minute chart. So this was the announcement here. Okay, again, this shows you how powerful a squawk is. Okay, this was the announcement here, and I got the announcement to the Telegram channel around here. Okay, so it took me a few minutes to get down. I wanted to digest, want to try to understand it, and make sure I'd understood it correctly before I send an email out to 80,000 people. And this was the Australian dollar Japanese yen move. This is a key global risk pair. When global risk is off, you see this pair fall. When global risk is on, you see this pair rise. So we saw this sudden downside, the yen strength. Similarly, you can see this is 10:10 GMT. So my apologies, it was a bit earlier than I said. So here you saw gold being bid. Okay, similar pattern in gold, and obviously, that makes gold potentially very attractive, just nestling up into this overhead resistance 147.345. So that's a key factor now for gold. And what's going to determine the continued upside or downside of these moves is what Donald Trump means, because geopolitical risk, which is what this is, it's a geopolitical statement, it's a political statement from President Trump, can change. And you know what President Trump is like? He might say, but I'm confident we'll get a deal done by January. You could easily see him tweeting something like that. So that's what we've got to be aware of. But for now, the market has switched to this risk-off mood, okay? So we're seeing some risk-off sentiment. Also be aware that the US is also considering higher EU tariffs because it's been annoyed about the EU subsidizing Airbus and the impact that has on US firms. So just to be aware that China's, US is trying to pick a fight with quite a few people, which is, typical of President Trump's style. He doesn't mind pushing his weight around, and the idea of taxing and tariffs on the EU is becoming popular with President Trump, because in his playbook, as he puts it, tariffs work. He loves tariffs, and he'll be quite happy to use them again. So remember, risk on and risk off markets, they're very predictable the way they work. When you've got a risk off market, you've got yen, Swiss franc, gold strength, and in certain circumstances, US dollar strength. You've also got Australian dollar, New Zealand dollar, Canadian dollar, the so-called commodity currencies depreciate along with US oil. Okay, and the Nikkei is obviously a key risk-off market that is helpful for me when I come to my desk on a. Yeah, that's Hashik. That's right. That's a good point. Hashik just makes the point that Trump is in the UK now. That's why he's tweeting at that time. Yeah, exactly. It's a bit early for him. Usually in the US, his tweets start around 1 o'clock GMT. Obviously, he's in London, so he's up and about tweeting. Good point, Hashik. Excellent. Now, risk-on markets. This is when the markets appreciate. So we're not in a risk-on mood. We're on a risk-off mood. So when we're looking at strong, weak currencies for the European session, I'm just going to walk you through what I did today. So you can see how to analyze this real time. So I came to my desk, and I came to my desk 6:30, and I read about the RBA rate statement. Okay, so just get rid of that. Now the RBA rate statement, this was a sentiment shift, because the market had been kind of anticipating the RBA to be quite dovish, to be maybe indicating 2 more interest rate cuts, maybe talking about quantitative easing. And what the market was kind of expecting was a dovish Reserve Bank of Australia. What happened is they released their rate statement, and they kind of indicated that they were on hold. They kind of indicated that they were waiting for the flow through from previous monetary policy cuts. They were a lot more kind of optimistic than the market was expecting. So that's why we got this Australian dollar strength that came into the market around the RBA meeting. So we saw 1, 2, 3 hours of selling on the euro Australian dollar pair, 3 hours of Australian dollar buying. Now, the reason I was looking at this pair early this morning when I came to my desk, around just before 7, I was looking for a pullback up into this 1.6220 level. Okay, you can see how well respected level it would be, because you've just got very simple. You've got very simple horizontal support and resistance. That's a key kind of level now. Okay. See how well that support was respected here. Now that support is firmly broken. So I was looking for a retest back up to this level, and then a move back down to these lows. So I chose the euro to pair it against, because we know that the ECB is, the European Central Bank is dovish. We know that Christine Lagarde, who's taken over from Mario Draghi, that she's got a dovish outlook and expecting pressure on the eurozone to continue. The Australian dollar, a more optimistic rate announcement from the RBA would have caught people out by a little bit by surprise, who were expecting something a little bit more dovish. Shorts would be covered, and so we see Australian dollar strength, which is what we saw, and that was the case. However, that was the bias that I had for intraday trading. However, when the announcement came out at 10:10, the obvious trade was instantly the Australian dollar Japanese yen pair. And because that was negative news for the US-China deal, that would put pressure on the Australian dollar. So you can see the Australian dollar was bid on the RBA announcement, but then it was suddenly sold off, which is what you'd expect as soon as there's negative US-China trade news. The reason for that negative US-China trade news is the fact that the Reserve Bank of the fact that Australian economy is very closely linked to China's economy. So what's bad for China is also bad for the Australian dollar. About 30% of Australia's GDP is made up from trade with China. So we see this Australian dollar weakness and of course Japanese yen strength on the risk off tones. So you can see in this instance, it became very, very obvious. And if you got in, let's say you had your squawk, you could have got in, I think it was price was around 74.74 when I saw the squawk and realized that, you know, that this was the time to take action. And you can see a quick drop into the daily support would be a very quick 25 pips, okay, just on that one announcement, let alone whether you decided to whether you decided to you know, hold the position. And even if you've just drawn a fib on the top there, you can see that you got a fib retracement back up to the 50% level. Always helpful if you ever missed a move, you know, and you want to get back in on it, just draw a 50% fib on it. Now, if you've missed this move, let me show you what else you can do. Okay. Again, this is not trading advice. All I'm saying, this is education. So you've got one bite of the cherry. We've also potentially got another bite of the cherry. Say this mood continues into the market. Okay. So say, like, for the rest of the day, there's 4-hour bar. The next 4-hour bar, we see selling down and we start hitting these support levels at 74.15 and below, right? And then you're thinking, well, you know, I've missed this move. I don't want to sell into this because, you know, the move's gone here. What can I do? Well, a key thing to do is you can trade retracement. So let's say, for the sake of an example, hypothetical example, let's imagine that price moves down to this support level here. Yeah, say it's just 74.10. Okay, say price does move down to that 74.10 level, which wouldn't be inconceivable, and the sentiment still remains. In other words, President Trump is still saying that a US-China trade deal is not going to get done until, you know, after the you know, presidential elections in 2020, right? So that negative sentiment is still here. Then what you can do is you can draw a fib retracement level on that whole move, and it hasn't moved down this far, but let's say it has for the sake of argument, and then look to trade back on pullbacks from this level back down to those recent lows. That's when you get your second bite of the cherry. So right now you've missed the main move now. That move is gone. It's not worth entering in. But what you might do, once you get a little bit of a bottom, get down to support, any pullback, as long as that sentiment remains, I would expect sellers. Again, it's not trading advice, it's just education. But if that mood remains, expect sellers. Daily resistance, daily support, turns resistance. It's a 50% potential retracement level, assuming we get a move down to these lows. And then where would I take profit? I'd take profit back at the recent lows, 74.13. Or if I didn't take profit there, I would certainly be aware of how price reacts that level. And then, you know, you'd be looking down to the 73.75 level. Down this kind of level will be your next target. Okay, so that's just showing you. So what I've shown you is how my assessment changed in real time. Okay, now I put all this up on our HYCM Telegram channel. So if you're not on the Telegram channel, you can go and have a look, and you can see that that's what I posted. I posted it here. I was looking for shorts, pullbacks up to this level, and then the situation changed on President Trump's tweet announcement, and that's when we flipped to Australian dollar Japanese yen bias. And of course, remember, gold is a safe haven. So let's say, you get the same with gold. So if you get the same with gold, you can look at a 50% retracement of that move, okay, and run your stops, out the way below these kind of levels here. So that's what I'd expect folks to be doing. I'd expect buyers on pullbacks on gold as long as that sentiment remains. Here's a little summary that's helpful to know is, if you have got a high volatility index, you've got stocks falling, commodities falling, bond prices rising, bond yields falling, that's risk off in FX trades. And as soon as that announcement came out, we saw stocks fall and we saw commodities fall. So I'll just show you the oil chart so you can see. You see here, you've got that oil chart falling on the news as well, back down into support level. So that's kind of the symptoms of a risk-off environment. Okay, so that's where we're at. That was looking back. That's what I looked at the Asian session. Weak euro, strong Australian dollar, and then we saw that changed for the to a strong yen and a weak Australian dollar. And risks to this outlook now are any positive US-China or positive news. Sorry, any positive US-China news. That is what is now the risk. Okay, because for every trade you have, there's always a risk, and that's the risk now that President Trump gets up and says, you know what, I love China, we're definitely going to do a deal in January, even though I said what I said earlier, I've changed my mind. President Trump does change his mind. So be aware of that. Okay. Now, I want to show you now this trading trick for selling surprise interest rates. Okay. So let me just show, let's just take, I'm going to take an example of any chart. Okay. Let's do, I'll tell you what, we'll do the US dollar Canadian dollar pair. Okay. So we know that the Bank of Canada are meeting on Wednesday this week. Okay. So let's just show you that. So Wednesday, we have the Bank of Canada interest rate statement. Now, they're expected to keep interest rates at 1.75%. Right. So what you want to do is, if you've got a situation where you know there's a potential surprise interest rate coming, this is what you can do. So let's imagine, for the sake of argument, this is a scenario where you're maybe thinking the Bank of Canada might increase interest rates. So that would be Canadian dollar positive, which would be US dollar Canadian dollar negative. Okay, so you're not expecting it to happen, but if it does happen, what can you do? Well, this is what you can do. There's two things you could do. You can either wait for the event to happen and then enter the market. If the Bank of Canada did raise interest rates to 2%, you would see the US dollar Canadian dollar pair fall about 100 pips straight off the bat. Okay, it would go down to 1.3216 in a heartbeat. Okay, so the problem with that is, yes, you would still get some more downside. Okay, you probably get a downside and you'd be looking ultimately a target down to this 1.32100 level. Okay, but you might have to endure quite a large stop if you wait for the interest rate statement. So here's a little trick of what you can do. All you do is put a sell on stop order about 25 to 30 points away from price. So if this is 1.3316, say you put a sell on stop order about 1.3276. Okay, so you've got a sell on stop order there, and you want your stop riding above the recent highs. Okay, now in that case, if there's a surprise interest rate move, you will be taken in on that initial move. Okay, you will get a fill, and it depends on which broker you have where your fill will be. So you might get some slippage. So you might get filled at 1.3262 or 3260, or you may get a really good fill right up the high, 1.3270 or something like that. But either way, you probably get some slippage because you expect that, but you're in, and you're in on the interest rate change. Okay, so you've probably gained an extra 30, 40 points, and you can either then take profit on the spike down, say it went down to 1.3216, okay, down to these recent lows. You might just take profit down there, or you might hold, but either way, you're in. Okay, now let's take another example. Let's take the example of an interest rate cut. Okay, so here's an example when the bank has a surprise interest rate cut that you're not expecting. So all you do is pop a sell on stop at about 81.35, 30, about 35 points away from price. You want it to be far enough away from price that you're only going to get twigged in if the interest rate changes. Don't put it like 10, 15, 20 points in, because sometimes you get 10 or 15 points volatility just before the interest rate announcement anyway. Also, be aware, if you put a buy on stop, you're much more likely to get triggered in prematurely due to the way that the bid and ask works on buying on stop. So I prefer to use a sell on stop order, whether it's an interest rate cut or rise. I always like to sell on stop because you only get pushed in when price moves past your sell on stop order. But with a buy on stop, you can get triggered in even though price hasn't gone above your buy on stop level. And that's to do with the widening spread. Okay, so only use this trick on a sell on stop. Right. So in this example, imagine I was there. I think, well, I could maybe Bank of Canada will maybe the Bank of Canada will cut interest rates tomorrow. I want to be prepared. So just a 35 points, 35 point, sell on stop below price. And then if the interest rate cut happens, you're in, and you're in nice and early. And then you can decide to hold or take profit. But generally speaking, when you get a surprise interest rate move, you're going to get a bit of a movement. Okay, so in that instance, you might well be looking down to this 80-50 level as a good take profit, maybe a slightly higher, maybe 81. Yeah, so that's the trick. It sounds simple, and I guess in a way it is, but sometimes the best tricks in life are simple, but that way you get tricked in. Okay, guys, what trades are you looking at the moment? Okay, what are you particularly looking at? Anything you want to go over? Any trades you're thinking of? I've shown you what I like at the moment. I like Australian dollar, Japanese yen shorts. I quite like gold longs in that I'm expecting gold buyers and I'm expecting Australian dollar, Japanese yen sellers. As long as this market condition remains the same, with the negative sentiment that's come into the market, with President Trump saying that he's looking for a China trade deal probably after the presidential elections. Shift, it's new, it's significant. Okay, silver, a US oil sell. Yes, yes, yes. I can follow your logic. Okay, now, US oil is falling down to this support level here around 55. Okay, so key things to be aware of if you're selling US oil. Number one, we're heading down into this key support level. Okay, so you could expect some profit taking there or some kind of reaction, maybe even a bounce. So there's a 50 points in it for further downside, in my view, from intraday. Okay, that's the first point, which is not, that's not a huge move. The second thing to be aware of is this. We have on the 5th of December, we have the OPEC meeting. Now, where is it? Where is it? Here. Okay. Now, this is the issue to be aware of with your trade, silver. On the 5th of December, OPEC are meeting. And remember, you may have caught in the news that Saudi's Aramco want to have an initial price offering on the selling of their company, the Aramco company. It's gone from being nationalized to privatized. It's being sold on the worldwide stock market. A huge, huge company. And of course, it's an oil company. So what does Saudi Arabia want to launch the sale of their huge oil company? What they want is they want high oil prices. So on the 5th of December, they will be meeting. And what they want to kind of announce is they want to kind of announce more production cuts. Ideally, they want to surprise the market with production cuts so that the price of oil rises so that their oil company is more attractive to investors when they come to invest. So just to be aware of that. So we've got global growth slowing, hence oil falling. But on the 5th of December, we've got this concern over the Saudis wanting OPEC to cut production levels, and we're falling down to this 55 support level. So Selva, your bias to sell crude, I think it's absolutely right. The thing to be aware of is the support level, the OPEC meeting, and the current bias here. So, you know, if nothing changes, you know, and you know, price moves back up to this 57 level, then you might expect another drop down to this 55, 50 level. Okay, but as it is at the moment, we're going to see a bit of moving around. Again, big geopolitical risk. It's focus in on, you know, focus in on President Trump and what's happening here. Okay, Hashik, pound CAD. Let's have a little look at pound CADs. Are you buying or selling a pound CAD? Hashik, just let me know. So, trying to sell, right? Okay, I've got you. Okay, the thing to be aware of with selling the pound at the moment is, actually, as I mentioned, the pound's been moving around on these polls. Okay, so as long as there's conservative majority, I'm expecting the pound to be supported into those elections. So at the moment, you know, if I had to pick a direction for the pound, obviously it's up. We've got the dollar index pressured, so we've got pound US dollar flirting with those 1.300 levels that we looked at. We've got the pound CAD is now moving up into this overhead resistance, so we're seeing some resistance there. So, you know, a sell from those top levels technically makes sense. The Canadian dollar aspect. Now, what's happening with oil? Oil is down and oil is negative. So a fall in oil prices is negative for the Canadian dollar. Okay, so you've got two pressures against you here trying to sell. So you've got pound supported on, you know, election polls and a conservative majority in, and you've got the Canadian dollar being sold off as oil is falling. Remember that there's a 96% inverse correlation between the US dollar, Canadian dollar, and oil. So in other words, if oil is up, there's pressure on the Canadian dollar to be bought. If oil is down, there's pressure on the Canadian dollar to be sold. So whenever you're trading the Canadian dollar, Hashik, always look at what's happening with oil. Obviously, oil's being pressured, so that's why we've seen this pressure upwards on pound Canadian dollar today. So the only aspect of selling that makes sense is coming into this overhead resistance level. But fundamentally, it doesn't make sense to me. Okay, that would be my big concerns with that level. But as I said, you are into an overhead resistance level, so I wouldn't be surprised to see a little fall back down here, given the fact that that's an overhead resistance level, and profit takers will be taking their profit moving into there. Okay, break up and beyond, and then you're looking at more upside. So that's what I think about the pound CAD. Yeah, okay. Just remember, Hashik, you want to pair a strong currency against a weak currency. And what you're having here, you're trying to sell something when you've got pound strength and Canadian dollar weakness. So if you'd said to me, I'm quite interested in pound CAD buying, I'd say, yeah, okay, that makes sense. You know, pound CAD buying at one of these pullbacks, one here, 1.7280, 1.7260, 1.7230. So those levels would make sense for buying for me, and that's what I expect to find buyers. But then what I would point out to you, if that was the case, was don't forget we've got the Bank of Canada rate statement. So the rate statement will be key in determining the future direction of the Canadian dollar. Okay, and so that's coming out tomorrow at, what's it, 3 o'clock. So that's why I'd be reluctant to take any medium-term positions, but looking at that level carefully, okay, because you might get a real difference. So if you get something that's really negative for the Canadian dollar, and then you got something quite positive for the pound, then you might think, oh, that's great, pound CAD longs makes sense. I'd expect buyers, okay. Oh, Australian New Zealand dollar, yeah, let's have a little look at that pair. Are you buying or selling, Hashik, the Australian dollar, New Zealand dollar? Sell. Right, okay, I'll tell you what I think about this. This has been a really good sell, okay? And the reason it's been a good sell is because there was a divergence between the Reserve Bank of Australia and the Reserve Bank of New Zealand. Right, the Reserve Bank of Australia had become more dovish when there's been a string of more positive data out for the RBNZ. The business confidence data out, which is quite crucial for the RBNZ, was like not disastrous. I wouldn't say it was strong, but it wasn't disastrous. There was a slight pickup from recent levels. So that's why we've been seeing the Australian New Zealand dollar pair just sell down. Okay, it's been a strong sell. Now, remember, this is what remember what I said earlier about the RBA, the Reserve Bank of Australia. They came out and they were more optimistic than the market was expecting. So that's why we're seeing some Australian dollar strength. So right now, we're seeing that Australian dollar strength. And so I would expect probably a little bit of a pullback now and a potential slight bottoming there. Like, it's monitoring what happens here is the key thing, okay? The Australian dollar, there's two narratives going on now with the Australian dollar, because you've got it moved up with the RBA, and then you've got it moving down with the US-China trade negotiations. So you've got to kind of balance those two things to see what's going on at the moment. But for me, I wouldn't be interested in selling this pair at the moment. I'd want some more information. So I'd either want the RBNZ to become, more bullish, or the RBA to have some negative data, something to justify that. But, if I was looking at selling on a swing trade, technically I'd be looking for a pullback to around that 50% level. So, the place that I wouldn't want to be selling down these lows anyway. I would be looking for some pullback down to, that key level here, that 50%, and these, look, resistance, support, that level there. I'll just draw it in so that, it's clear as can be. So that kind of level there makes sense to me, okay? So up here, 1.0670 and below. Okay, so that's what I think about Australian New Zealand dollar. Okay, guys, in the absence of any other questions, thank you very much. I hope that's been helpful for you. Look out for the risk tone. Remember, with geopolitical risk, it can change very quickly. But just as we close, I am expecting to see more gold buyers. It's an interesting point. Get above this 1474 level, and then it opens up for more upside. Remember, if there's more negative US data, if there's concerns about US data, then there's going to be less likely to have US interest rates, which is going to be further supportive for gold. If there's a slowdown in global growth, if the US and China trade war is going to flare up again, and tariffs are going to go, and that's going to weigh on US manufacturing, then gold starts to look very shiny again and very attractive to buyers. So also be aware that the month of January has been very strong for gold. It's the Chinese Lunar New Year. There's a lot of gold purchases. There's a sort of cultural thing about giving gold. So that gold market has potentially a lot of things to give it support. We've got the 100 exponential moving average being supported. So this is one chart that I've got my eye on for, a longer term situation. Guys, thank you very much for attending. Yeah, thank you, John. I hope you're doing well. You take care and have a great week, and I look forward to being in touch with you. Thanks, everybody. Bye now.